stocks, or as the normies refer to it as now, stonks. I swear that joke's been beaten down more than GameStop's price. First off, I'm not a financial advisor. I'm not your broker dealer. I'm not any of those things. I don't have any involvement in your life whatsoever. Anything you do, the sole responsibility falls upon you. Please do your own due diligence. And I'm just some guy on the web, so don't take what I say at face value. Even if it's right or anything like that, you must make up your own decisions. Now, one of the things that I should tell you also is that you are legally obligated to smash that like button and subscribe. Okay, so in the previous one I talked about how Forex and all the pros and cons of it. This one is more stock oriented and to see if stock trading is actually the right vehicle for you or not. Now, because I don't have oodles of time and years to actually, put out my thoughts in full form to all the specific details, these are just some tidbits that I can think of off the top of my head. I stewed on it for a little bit, but there's probably some things that I left out or probably forgot or just omitted because, just for time's sake or anything like that. But this should be like a small condensed list of some of the pros and cons. It's up to you to decide whether you actually think that, trading stocks is your fit. And, honestly, it's not a good or bad thing. I mean, if it works for you, it works for you. That's simply it. All right, let's start with pro number one. So the first one is that buying and holding is extremely viable. People have bought stuff and forgot about it in their portfolios for years, only to come back and realize that it's either become a rock star or it literally just flopped on its face. And that's kind of where diversity kind of helps you with your portfolio and everything. All right, so number two, this is a pro, at least to me, in my opinion. But the stock market is manipulated, and honestly, if you guys don't see the opportunity in it being manipulated the same way over and over again, I honestly can't help you, because if you guys can't come to the terms and say that maybe you're the one in the wrong, rather than actually going against the grain for some of these stocks, and not all of them, obviously, right? Sometimes you are absolutely correct because maybe you're an expert in the field. You can tell that this person is talking about complete and utter medical bullshit or whatever, right? It's what I'm trying to get at is that manipulation follows a certain type of pattern, and if you are able to suss out that pattern and you understand it in its entire capacity, you can exploit it however you want. You can exploit it to make money, either going with them or going against them, knowing that they're fully wrong. Pro number three: when a company benefits, you benefit. And honestly, it's not bad, because if you pick good companies, ones that obviously, there's an introduction of this whole ESG thing, which I think is complete and utter. I didn't like Beyond Meat before, for example, right? However, despite that, I still thought it was a great pick, especially during the pandemic. When you hear stuff about, there's possible disruptions in the supply chain, and that it's not possible for farmers to farm because they don't have the extra labor and all that sort of stuff. Something like Beyond Meat was actually right place, right time, because now they went from no exposure, no one really wanted this, to it might be the only source of protein and meats that you can actually get food from, because all their stuff is lab grown and everything, and they were the only one that was publicly traded that you can jump in on, obviously, right? So it's a timing thing, right place, right time. And the fourth one is it's a great way to keep up with inflation, or actually even beat inflation. And most people don't really think, oh, inflation this, everybody talks about inflation this, hyperinflation that, or whatever. Where's this inflation people talk about and stuff like that? Honestly, look at the CPI values. I believe your food costs in the US rose by 4%, and that doesn't seem like a lot, but that's 4% across a lot of things. Not just your bread and cheese and milk and stuff like that. It's 4% across of everything. Now, it doesn't seem like a lot to someone looking from the outside, but that stuff adds up. And it's not like, if you had $10,000, obviously, right? You can buy $10,000 worth of goods. Well, what happens when it becomes 4% more expensive to buy those same goods that you once did? Well, you're going to be buying a little bit less. You're going to be buying exactly 4% less, and that's kind of the point. The stock market, especially the SPY, has historically yielded a return that is enough to beat inflation, typically around 8 to 12% per year or whatever. But yeah, it's It's something that seems very minuscule and very difficult and like an uphill incline curve, whatever you want to call it, but it is actually very, very important. Scene transition. All right. So the first one of the cons I would say is that most brokerages don't allow you to have after hours trading or even the full extended after hours trading. And some of you who do remember back in that one morning call, back when AMC was just like on a tear and everything, right? I got in some the night before, and I also got in some that was after hours, and I also got in some in the morning of. Um, it just took off from there. But like I think the most prevalent example and the most recent example was that when Bitcoin over the weekend just soared to new heights and it was hitting its old high or whatever after dumping and everything, the week after, like the AMC GME hype and everything, Bitcoin soared. But obviously since Mara couldn't trade over the weekend, it didn't rise with the price. It stayed around like $24 or something like that, right? I woke up at 4 a.m. that day and I saw it was at $24. Granted, I don't have any capital left because most of it's locked in other plays, but if I had capital left, I could have taken Mara at 24, which was near where it closed on the Friday before. And going into the trading day, it shot up to like 30 something or whatever, right? But the whole point of it isn't that like, the money I missed out or like how far Bitcoin and Mara ran or anything like that. The point of it is that you could have had access to pre-market at 4 a.m. starting 4 a.m. in the morning when the price hasn't even been affected with the stock yet, except if you were on one of these other like Fisher Price brokers that they don't allow you to do extended hours trading. And honestly, sometimes it's a disadvantage, but the problem is that most people don't understand how pre-market trading works. And if you thought some of the stocks that you play, the spreads are really bad, you've never seen the pre-market. You've never seen the aftermarket either. Like it can be very dangerous. It's somewhat of a double-edged sword. I see why brokerages do that, but honestly, once you learn about it and if they actually even properly taught you about like this is what after hours trading is like, I think that most normal people, if they were to make a mistake in there, obviously it's going to be their own fault, but instead of trying to coddle you and do all this sort of stuff, I think they need to either educate you, take a step back, educate you, and essentially empower you with that knowledge. It's like, let's say you can get a fill 50 cents out of the money, or 50 cents against you in the pre or after market. You are well aware of that versus like, nope, this is bad. We can't teach you how to navigate in that market or anything like that. I think that's infinitely worse because that keeps you dumb. It keeps you in the dark. All right, con number two, and that is price is a deterrent for more stable companies, but a higher barrier of entry can also affect you emotionally as well. And what I mean by that is that like if you look at some of the biggest companies out there, like let's say McDonald's, for example, right? We understand what McDonald's is. They're more of a real estate company. They're a fast food brand. They own the place that they like property wise. They own the land that they are on, and they lease it out to other people. People always go there to eat in a good economy, bad economy, whatever. But it's $200 a share, and I'll never make any money off of that. It's not going to go up. It's not a growth stock, et cetera, et cetera. I find that I find that there's a weird dichotomy between that because, yes, these companies are highly priced, but here's the thing, they're highly priced for a reason. And that is that they're either a titan in their industry or they do something that is worth that type of value. And something that I find somewhat of a negative is that um, obviously like people themselves self-sabotage because they're like, oh, why would I buy a single share of McDonald's when I can go buy this like garbage nothing stock because it's hype or whatever, and I could buy like 20,000 shares of that versus a one share of McDonald's. I'm not saying both are right, but I'm not saying both are wrong either. And the thing is that I think price is a huge deterrent because especially in today's age, everybody's just, it's not that everybody's broke. I know that there are people who are broke essentially, right? But I think the mentality is that a lot of people have this really cheap mentality saying that they want it at on they want the deal. They want it on pennies on the dollar and stuff like that. And the truth of the reality of it is that that's you emotionally wanting to feel that you got a good deal out of this. And honestly, opportunities like that, I'm not saying they come once in a lifetime, but I'm saying that you might be waiting for a very long while before the next little crash comes. Con number three, and that is you could actually lose your entire investment and probably then some. Like depending on how you structured your account, maybe you're in a margin or something like that. Like you can lose basically anything, everything plus. And con number four, the research time can be very, very lengthy and ongoing. And what I mean by that is it's something like Rita kind of said, mostly because I didn't do qualitative research whatsoever before. I was more of a technical flow guy. So um, typically I'd be looking at prints or stuff like that. Obviously, like if you guys have ever, depending on how you trade, obviously, right? Technical, fundamental, whatever. Technical, you're always looking for essentially for it to go to a line or something like that or whatever, right? Or it maybe even bounce off, break, whatever. Like you're doing the research time, and it takes a long time because you have to study it every single day to make sure that it's actually appropriate. And sometimes it just doesn't pan out. And it's the same with the other flip side, which is FA, which is fundamental analysis. You could spend countless hours reading like their financial reports, their vision, their proposed vision, their S1s, any filing you can get your hands on, anything that they're looking at prospectively for the company, either technological innovations, whatever, et cetera, et cetera. All that takes a lot of time, and you have to track it every time they have a news release. Like, think about how many people monitor or has researched Tesla and everything that they do, the battery tech, the cars, SpaceX, what Elon's doing, Elon's tweets. Like that is, as Rita says, a full-time job. And I don't know if you have all the free time in the world or you're constantly like scanning and reading all this sort of stuff. It's a very, very long time sink to put in. Granted, it can pay off or it might not even pay off at all. It might actually lose you money. So it can go either way. So my final thoughts on whether stocks is the right vehicle for you. Um, it's one of the hardest ways to make an average living. And despite what you see online, I saw like an explosion of people becoming like these self-trading gurus or stuff like that because they had like 1 or 2 months worth of success. And it's hard to see those wins, but here's the thing: you never see what years they lost or what they did before and everything, and what they are left with after taxes and all that sort of stuff. I could almost guarantee you with a high degree of certainty that these people won't be around probably in the next few months or so, um, depending on how they trade or whatever. But it's what they capitalized on was that they were right place, right time. They capitalized on a momentary uh, area in the market where it was super lucrative. Granted, not all of them. Some of them actually do some solid qualitative research, but not a lot of them. Also, one of the other things is that this is also one of the only jobs where you actually pay to work. And again, if you guys have never started a business, like you guys know that in a business, especially a buy sell business, there's a risk of you buying something and acquiring inventory and then just never being able to sell it, and that's a loss. So you're essentially trying to pay to make money off that, and that's viewed as something of an investment. This thing is just more direct. You're just not having the solid goods to resell to anybody at a later time. Like sometimes that the goods might just not even be good at all. They just might become crap. Okay, and the fourth and final one is that there's a lot of noise out there nowadays, especially with the rise of like social trading and social media and everything, and everybody, going to plug in their opinion to some sort of stock or whatever, right? And one example of this, and I got swept up by this too, right? But uh, if you looked at, I don't know, for example, like the Form 4s, which are insider trades reported, and you looked at like, something like Facebook with Mark Zuckerberg, long and short of it is that he was selling like 50,000 shares every week or so, or every other week and stuff like that. And you know, I would reasonably expect like, holy shit, Mark Zuckerberg is getting out of Facebook. He's a $1 CEO. If he's selling his Facebook shares since he was the CEO and founder, that's not a good sign and everything, right? Now, I had to step back from this because Rita actually corrected me on this, and it wasn't him selling this. It's that you have to. It's probably buried somewhere in their S1 or somewhere in some of their filings where he would call a meeting, and since he's a majority shareholder, he would call a meeting and say, okay, anybody that objects to giving me 50,000 shares every week, and then offloading it every week as a $1 CEO. Okay, no objections. Okay, cool. All right, I'm a $1 CEO, but I get 50,000 shares of Facebook every single week. Done. If you just read that off stock twits and say, like, if someone just brought that up, right? I can almost guarantee with a certain degree of certainty that most of the people on there would just say like, "Oh my God, this is the end of Facebook. Mark Zuckerberg's getting out. What does he know that we don't?" And they'd start freaking out and everything. They wouldn't know that one key fact, which I didn't even know myself. And honestly, if I was to get swept up with this whole social trading crowd group or whatever, right, I might be holding GME at $400. I don't want to be that guy holding GME at $400. I don't want to be late to the train. I want to be ahead of that train. And it's that the whole adage was that if you guys have ever read a book called Reminiscence of a Stock Operator, which I highly recommend, um, if you can try to find the unabridged version, it's written by Edwin Lafleur, whatever. But again, it depends on who you ask. But it's either Jesse Livermore or Jesse Livingston. I've seen two iterations of it. I don't know which one's right. I'm just gonna say Livermore because that's what people constantly refer to him as, rather than the whole new genre stuff that's referring to him as Livingston. I don't know why, but whole point is that he was knee deep in a stock, and this was back in like the 1930s, I believe. He would this is back when shoeshine boys still existed, right? So there'd be like this little throne slash platform that you get up on, and you still see it at some airports where you sit down on there, and like some guy comes up or some kid comes up and starts buffing your shoes, cleaning it, polishing it, and all that sort of stuff, right? Well, one of these shoeshine boys decided to tell Livermore, "Hey, I just got a hot stock tip. Uh, I heard about this one stock here, or whatever, and I hear it's going to explode now, whatever. The usual stuff that you would probably read on stock twits, obviously, right? Or, for the lack of better, I guess, sorry, for the evolution of technology, Wall Street bets. They're going to say all this stuff like, to the moon, rocket emoji, etc., etc. Now, the moment Livermore realized this, he's just like, this kid doesn't even trade stocks, and he's giving me stock tips. He doesn't know anything about stocks whatsoever. I'm literally selling my stock now because this is when the public market jumps in. This is the people who are bag holding GME at $400 jumping in. That's usually that was mentality. I didn't develop it. It's just something that happens. It's a funny story that keeps happening over and over again in human history. But I don't know. Like I would say, read that book. It's an excellent read. But that's all I have right now for this video. I will be doing the futures one. I didn't think that. I keep saying I don't want to draw these videos, but like the problem is that this is such a long form type of subject. I can't condense it down to 10 minutes. It just doesn't work that way. I wish I could do it in 3 and talk in like 3,000-4,000% speed or something like that, but I can't. Like I'm doing the best I can, and you can help me probably get better with this if you smash that like button and subscribe. Leave a comment if you want to leave a comment. But for now, I'll see you in the next video. And oh yeah, just I want to make this my catchphrase now. But just remember, just because you're a day trader doesn't mean you have to trade every single day.